Hi, Paul. How you going?
G'day, Matt.
Thanks for
How
joining
you
us again
run?
today.
Sorry?
I said thanks for joining us again today. Paul presented in some of our earlier topics
Oh,
on
my
the
pleasure.
government
No,
stimulus
good.
package. And
Yep,
so,
I'll put some slides up on the screen.
yeah, that'd be
Talk
great,
about
Paul.
that.
So Paul presented early stages of on our forum in relation to the government stimulus packages and also specifically around JobKeeper and that sort of type thing. And so what Paul's going to talk about today and lead us through is the extension of JobKeeper, because there is a lot of complexity and uncertainty around how you apply the new rules in relation to this and who's eligible and who's not, and what the payments and how the actual program works. So Paul's going to take us through that this morning. And if you've got any questions as we're going through the presentation, there is obviously the question and answer button down at the bottom. So please feel free to use that and we can ask some questions throughout the presentation or a bit later after we've finished it. So I'll hand it over to you, Paul, to get into your presentation.
Thanks, Matt. So before we start, I might just recap on what our existing program is, because some of the changes on the extended program, I guess, are similar to what we've been working with, but there are some key differences. So that's worthwhile just touching on where we started from, which was effectively a program to support employing businesses. If those businesses had suffered a reduction in turnover based on specific requirements, there were date-based sort of comparative requirements to a relevant period. If that was applicable, then they were entitled to receive payments of $1,500 for all the eligible employees that they had from the 1st of March. We had a number of our clients who opted into the scheme because they satisfied the criteria. The program was due to end on the 28th of September. However, it's now been extended for a further 6 months until the 28th of March. One key change, we'll go into more detail through the slides, but one key change was that from the 3rd of August, the relevant date of employment has moved from the 1st of March to the 1st of July. This increased employee eligibility was basically a result of the impact of the increased restrictions in Victoria, identifying the businesses that maybe hadn't suffered that reduction in turnover or had employees sort of on board in the previous 3 months weren't negatively impacted. So, the employees starting on 1st of July effectively meant that we have more employees that are eligible under this extended program. A change that works the other way is that the rate has reduced. So there was a flat rate for all employees of $1,500 per fortnight. That's now been reduced in the first sort of quarter from the extended program is to reduce it to $1,200 per fortnight. And then from there, for the remaining 3 months, it's reduced again to $1,000 per fortnight. There are lower payment rates for employees working less than 20 hours per week. So it was a flat rate for all employees, part-time or otherwise, last time. So there were employees that were receiving $1,500, even if their work hours weren't generating that level of remuneration for them. So in this case, they've adjusted for that. One of the key changes is that the extended program is based on actual GST turnover. So a lot of our client examples that we worked through under the existing program was to project the income, and based on those projections, if the turnover was expected to reduce in comparison to earlier periods, then that allowed them to opt into the program and receive the payments. This one is a retrospective look, effectively working on your actual performance to the end of September. And if that comparative period of September 2020 to the previous year on a quarterly sort of revenue basis relating to GST turnover, if that reduced by the required amounts, then you would be eligible for the 3 months that follow. And similarly, when we look at the next quarter onwards, it's looking at the December quarter actual GST turnover compared with the actual turnover in December 19, and then being eligible to receive those payments from the 4th of January to the end of the program on the 28th of March. So what it does is provide much more certainty for eligibility, because we did have to work through with a number of clients projections and the like to sort of work out whether or not that was satisfied. But it's, in this case, it's working with some certainty around that.
I think that's a good point to make, Paul, around the fact that, the first time round we were grappling with this is a new concept and new laws, and we had to deal with sort of inequities in them. What they've tried to do with I suppose the extension of this is pull out some of this inequity and get it a bit tighter, because they've made probably some errors in terms of drafting legislation, which makes sense given how the speed in which they did so. But obviously what they're trying to do now is make it fairer, more equitable, and tighten up some of the rules there to support that.
Exactly right. And I think the one thing that we experienced in discussions with our clients was that if there wasn't some uncertainty about the projected period, we were unsure as to how that would be treated. So if you expected to have the turnover, the ATO did say that you wouldn't be penalised for overstating your drop in revenue, but still that's created a level of uncertainty that at least has been ironed out in this version. One key point at the bottom of the slide there is that even if the actual turnover reduction isn't satisfied when we're looking into the extended program, it won't impact on eligibility that exists under the current program. So that was one of the keys we had with the first version of the JobKeeper program, was that you could be satisfy the turnover drop requirement in the month of March, for example, and you would be eligible for the remainder of the program to 28th of September. This is just confirming that current turnover won't impact on eligibility for those that are currently in the program at the moment. So the JobKeeper rates, as we touched on before, have changed. So there's two components for each period. So we've got that's sort of split into full-time employees or employees working more than 20 hours per week, and employees working less than that. So they've broken up the payment, so reduced it from $1,500 in the first instance, and then broken that up for the first quarter of the new program to $1,200 per fortnight for those working more than 20 hours per week, and then $750 per fortnight for employees with less than 20 hours per week. So that includes eligible business participants. We had a number of clients who weren't paying themselves a salary but were actively involved in the business. So in this example, it works that if that employee is actively involved for more than 20 hours per week, so in some roles it might be less time required, so you wouldn't satisfy the 20 hours per week, but we have a number of clients who sort of meet this requirement, then they can continue to receive the full payment under the extended program, in this case being $1,200 for that first quarter, and everyone else fits under the $750. Then from the 4th of Jan to 28th of March, there's a reduction from on the full payment to $1,000 per fortnight for full-time or employees working more than 20 hours per week, and $650 per fortnight for all other employees. One thing that we've sort of identified as some uncertainty within the rules as they currently stand is that the employee hours may not be regular. So in a lot of cases, when there's sort of part-time or regular hours or casual type arrangements, that where there's uncertainty as to the 20 hours per week, there is going to be some discretion and alternative tests that are provided. Now, one thing that we identified in the drafting of the ATO's fact sheet that was released last week was that there's a lot of reference to discretion and guidance to be provided. We touched on before about the actual basis, looking at revenue and turnover to the end of September. What that does is provide us with a little bit of time for these to be ironed out, so the ATO does have some time to provide more guidance around how things like the employees' hours would be applied and different pay cycles. So when we're looking at the 20 hours per week, it's looking on the basis of the average of the 4 weeks prior to either 1st of March or 1st of July. Now, that might not be a weekly pay cycle for a lot of employees, so the ATO will provide some guidance on how that would work. So we do have time, I guess the point being, to get to a point where we can understand more about that, because we've got until the end of September before this kicks into gear. The JobKeeper payment timing is important. As with the existing program, the payments continue to be made in arrears. So what that does is require employees to make the payment to the employee prior to receiving the payment from the ATO. So what that, I guess the uncertainty that can result from this is that the actual GST turnover is used, and we won't really know what that position will be for the September VAS until October, when we've reconciled the books. So we just need to work through that sort of that issue, just to understand if we're going to be eligible, then we need to have made the payments to employees to satisfy the wage condition. So I think the ATO has identified, again, this is an item that may need a little bit of discretion, as there are circumstances where that there might be uncertainty as to whether or not we're going to satisfy the wage condition. So again, looking to sort of find out more from the government as to how that will be applied. But from a timing perspective, it's ensuring that employees are paid prior to receiving those. That's one of the conditions of eligibility to receive the JobKeeper payment from the government, is that you've made those payments to employees.
Which can actually cause you some issues around cash flow, because you've got to pay out before you receive, which is, can be a bit problematic for some employers, obviously, given circumstance and why we're doing what we're doing. So that's something that, you've got to be very mindful of being able to receive it.
Definitely was a challenge in some client examples. In the first version was that there was that timing difference. So effectively you're funding the JobKeeper payment in advance. But that continues to be the requirement. But in that sort of initial period for the first version, when we're looking on actuals, it might be that we were granted some discretion to allow us to work through those calculations prior to receiving or opting payments, which is what occurred in the first. We're given a grace period effectively for the first 4 to 6 weeks of the initial program, so they've continued with that, which will help. The employee eligibility hasn't changed really from the first version, except for the date, the relevant date being the 1st of July, which does help. To work through those requirements, currently employed by an eligible employer, which does include employees which were stood down and have been rehired. They need to be employed on a full-time, part-time or fixed-term basis on the 1st of July, or a long-term casual that's been with the employer for at least 12 months. Aged 18 years and an Australian resident or tax resident, not receiving government payments, including parental leave and workers' compensation payments. A key, as per the existing version, is that only one employer can claim payment in respect of an employee, which is all recorded through the reporting system. Is that we're requiring employees to sign documentation to opt into the program effectively. So that continues, and there's a way to ensure that the employee is only receiving one payment. Self-employed will be eligible where they meet the relevant turnover test, and sole traders and the like can satisfy the requirement, provided they're not receiving payments otherwise. So a key topic for us that we've tried to get more understanding of, and it was definitely a hot topic that we worked through on the previous version, was the concept of the alternative test. So a lot of our client base does not necessarily have a regular turnover cycle compared with a prior year. It could have been because they're in startup phase, or increased turnover, they've been in growth phase, or a structure of the business, irregular turnover. There are a number of examples that the ATO identified as being effectively difficult to use prior year as the comparative period. So they released alternative tests and were very specific about how they worked, and so that gave further guidance. In the current fact sheet that we've got to work with under the extended program for JobKeeper, they've effectively said that alternative tests, the discretion will be applied in consideration of those, and that's where we're hoping or looking to see further guidance from the tax office around how they will be applied, like we did in the previous version. And we do have effectively end of August and much of September to sort of work through and understand what that looks like. So the previous test did seem to work well. There are some differences that we think. So for example, a business that that might have been in growth phase before the initial impact of COVID may have had a drop off. So using its growth prior to eligibility for this September quarter may not be relevant in that example. So again, some specific sort of detail around that would definitely help us with understanding how an alternative test will work under the extended program.
I suppose it's fair to say that this was probably an area that we had to spend a bit of time in historically, just because of the complexity of it, because there is discretion there.
Yeah.
What we're trying to achieve there is making sure that the people that should be receiving JobKeeper are getting it, really, at the end of the day. That's the whole point to this, because sometimes the rules can leave out people that should actually be qualified for it under normal circumstances. So I suppose the thing is, but for a specific circumstance, would you otherwise have qualified for, is really what we're looking for in that situation.
Yeah, and thinking back to the discussions we were having at the time, and it was, definitely a key point for a number of clients that we work with, and just general business year on year is a good metric in most cases, but we identified a number of circumstances where that wasn't relevant. So yeah, definitely is looking to make sure that the program is available for those that need it. So yeah, detail around alternative tests is something that we'd be looking to understand as more information is released.
And that list there pretty much covers off a lot of that but for scenario, that but for normal circumstances you would have qualified, and these are some of the alternative reasons that you should qualify.
Exactly right. So so we'll, as information becomes available, we'll circulate that to the viewers on the forum, just so they've got that information to work with. That about covers off on JobKeeper. I thought it just worth touching on the Victorian Business Support Fund. So it was a grant that a lot of our clients opted into or applied for on the first version. So in March, they released support in the form of $10,000, effectively for employing businesses, and they've extended that in light of the increased restrictions in Victoria. So it's allowing a further $10,000 in addition to the $10,000 that businesses may have received previously for metropolitan Melbourne businesses, and those in Mitchell Shire, region of Victoria, be entitled to receive $5,000 under the same program. It's in addition to the first program, so you could receive, in some cases for metropolitan Melbourne businesses, $20,000, being 2 lots of 10, and that closed previously. It's now applications have been extended until the 14th of September for this extension or the new grant that's been provided from the Victorian government.
Yeah, and I mean, throughout the previous sessions, we have covered off on some of the stimulus packages that have actually been created by the state governments in New South Wales and Queensland and other states of Australia. So probably what Paul's just covering off on is some extensions or some new ones, given that Victoria's probably been hardest hit by the second wave so far.
Yep, and on that, we've sort of been working with sort of the specific accounting tax and for our client base, an important component is R&D tax treatment of some of these grants and stimulus payments. They all have different sort of specific treatments in relation to tax and R&D. So what we've been working with is just trying to simplify for, I guess, our team and also our client base as to how these things are applied. And this little summary just effectively works on the key components that have been announced, being the cash flow boost, JobKeeper, various state government grants across the programs across different states, payroll tax refunds and other expense type rebates, and an extension of the instant asset write-off. So what we've been looking to do is just sort of understand, or make it simple to address the appropriate tax treatment and the R&D component of that as well.
Yeah, and this slide wasn't meant to cause people to go cross-eyed, given it's very sort of heavy in sort of technical language. It was more just to highlight the fact that we have to take into consideration alternative or other tax areas when you receive payments from the government. Some are taxable, some aren't taxable, some have got GST and included in, some don't, and then some will have an impact on an R&D tax incentive, which we do a lot of work for our clients. So it's just more to highlight that it does have other tax ramifications by receiving cash from the government. And so, it's just making sure that people are across and aware of that. So when we're, obviously making sure that we're staying compliant with all tax principles. And that's why we put this slide together for people to understand that. The question that we got, Paul, while you've been talking is that, somebody asked to explain a bit further the tax withholding rebate. I think they're talking about the cash flow boost in that. So that, just in terms of, that was something that we had, and that's the first part of that slide there, that it is actually revenue, but it's non-assessable and there's no GST on it. That's the tax treatment in relation to that.
Yep.
which is good, because it means that there's no other tax ramifications, and you received up to 50K prior to the 30th of June, and then potentially up to another 50K sort of post 30 June. And those that are qualified pre are currently, for July or September, if they're due the maximum, getting 12.5 grand a month. Is there any further sort of information or advice or questions that you've been getting in regards to that?
So I mean, I think that's, we're sort of seeing with the lodgement of the June BAS, that second round of payments coming through. So in some cases, another 12,500 on lodgements. But yeah, one thing that we sort of considered was the timing of recognising that that boost payment in income. It did, as it's exempt for tax. From that perspective, we haven't, it hasn't really been in that relevant in terms of the tax component, but in some cases having the cash flow boost recorded in the June quarter for like accruing for what we're due to receive makes sense, because that's the period it relates to. So again, probably touching on the different sort of accounting and tax concepts, but in relation to that's been the key thing, is just sort of understanding how the follow-up payments are going to be made over the subsequent periods.
Yeah, and there's been some questions coming through from Fazul about how you actually receive that cash flow boost. That's kind of already been done in the prior periods. I think you can't, if you sort of qualify in the prior periods or claim for it in the previous BASs, then you're not eligible for it for this financial year. Is that correct, Paul?
Yeah, so it was based on actual, so or based on lodgement. So it was an automatically generated sort of refund or credit that was applied to ATO accounts on lodgements, and recognising PAYG withholding recorded in those relevant periods, which were the periods to the end of March and end of June. So if you had withholding on those payments, then the ATO would effectively automatically apply the credit in relation to that. There have been a couple of examples we've come across where, with GST groups, the employing entity might be different to the entity that's recording the income, because there's a requirement to record income. So that has been a query that we've had to work through, and in that case, there's a line through to the tax office that effectively just provide the information to clarify that even though the employing entity doesn't record revenue on their BAS returns, it still is receiving sort of income. So there have been some of the complexities we've identified with receiving payments, but ultimately it's automatically applied based on lodgement of BAS returns.
Cool. So if you're struggling with that sort of type stuff, probably worthwhile giving Paul a call after this session. And also Philippa has sent us through a question too about, do you recommend that we make a JobKeeper payment today for fortnight 10 for those employees who have become eligible due to change in date to 1 July 2020? Not sure that I fully understand that question, but Philippa, we obviously know you very well, that we can.
Yeah, and I think I've got a call with Philippa this afternoon, so we'll cover off on that and get some more detail. But that becomes one of the keys around, and we've always understood to have the payments made. But if we satisfy the employment test for employees from 1 July, then we should be treating them as we had with employees that were on the books from 1 March. So I think if we follow through with that, we would make the payments if they were eligible employees.
Cool. And just another question, one last question before we probably move into our second presentation. And we can take a bit more later, or you can send them through and we'll answer you back. But Philip was also asked about the Victorian Business Support Fund grant. So the payroll tax payers previously were not eligible to the grant due to the payroll tax refund. Are we now eligible to apply? Do you know the detail around that, Paul, or is that sort of outside?
No, I'll look into that one as well, Philip, and we can discuss that further. But yeah, the criteria around the new version of the grant, it is very similar to the previous. Yeah, we can discuss more details when we chat.
Great. Well, Paul, that's been extremely helpful in relation to sort of what we're facing, some of this complexity that's going on in terms of making sure that we are able to get what we need to support our businesses through these difficult times, especially around sort of cash flow. So very much appreciate that. And if obviously we're here to help, and if anyone's got any specific questions after the session, please reach out to us, because we're here the reason why we're doing this is to get as much information as we can to as many people, but then we obviously need to specifically deal with everybody's circumstances. So, you know, feel free to reach out to us post to make sure that you are able to get, you know, what you're entitled to help your businesses thrive through this period of time. So thanks very much, Paul. Appreciate it.
Thanks, Matt. No problem.